What are smart contracts and how do they work? Smart contracts are game changers, but not all of them are created equal. Many daily interactions are based on contracts and agreements, whether it's your employment contract, your rental or mortgage agreement, or the guarantee on a new television. The beauty of smart contracts is that they can be formalized and set up to function automatically without the need for a third party. But what are smart contracts and how do they work? That is the question we're going to be answering in today's video. Let's dive right in. What are smart contracts? Smart contracts, like traditional contracts, are agreements between two or more parties in which one party makes a valuable offer to another and the offer is accepted. Smart contracts, like any other contract, spells forth the conditions of a trade or agreement. Smart contracts, on the other hand, are distinguished by the fact that the terms are established and implemented as code running on a blockchain rather than on paper on a lawyer's desk. Smart contracts build on Bitcoin's core concept of sending and receiving money without the need of a trusted intermediary, such as a bank in the middle, allowing for the security, automation, and decentralization of practically any type of trade or transaction, no matter how complicated. They also provide security, dependability, and borderless accessibility because they run on a blockchain like Ethereum. Why are smart contracts important? Developers may use smart contracts to create a wide range of decentralized apps and coins. They're utilized in anything, from new financial tools to logistics and gaming, and they're recorded on a blockchain just like any other crypto transaction. A smart contract program can't usually be altered or reversed once it's been uploaded on the blockchain, although there are some exceptions. Decentralized applications, or DApps, are smart contract-powered apps that integrate decentralized finance or DeFi technology that promises to change the financial sector. DeFi apps allow cryptocurrency users to conduct sophisticated financial operations such as saving, loan, and insurance without the involvement of a bank or any other financial institution and from any location in the globe. The following are some of the most popular smart contract-based apps right now. Uniswap, a decentralized exchange that allows users to trade specific types of cryptocurrency using smart contracts rather than relying on a central authority to establish the exchange rates. Compound, a platform that leverages smart contracts to allow investors to earn interest and borrowers to receive a loan quickly without the need for a middleman. USDC. It is a cryptocurrency that is linked to the US dollar via a smart contract, making one USDC equal to $1. Stablecoins are a newer type of digital currency that include USDC. So, how would you put these smart contract-enabled technologies to work for you? Assume you have some Ethereum and you'd like to exchange for USDC. You may deposit some Ethereum into Uniswap, which will automatically locate the best exchange rate, execute the deal, and pay you your USDC via smart contract. You can then use Compound to lend part of your USDC to others and earn an algorithmically calculated rate of interest, all without having to use a bank or any other financial institution. Swapping currencies is costly and time-consuming in traditional finance. Individuals also find it difficult and risky to lend their liquid assets to strangers on the other side of the planet. Smart contracts, on the other hand, make both of these situations, as well as a wide range of others, feasible. So how do smart contracts work? Nick Szabo, a computer scientist and lawyer, originally proposed smart contracts in the 1990s. A smart contract, according to Szabo, is similar to a vending machine. Consider a machine that sells quarter soda cans. If you put in $1 in the machine and choose a beverage, the system is programmed to either give you your drink and 75 cents in change, or urge you to make another option, or get your dollar back if your pick is sold out. This is a simple smart contract example. Smart contracts can automate practically any type of trade, much like a Coke machine can automate a sale without the need for a human middleman. Although Ethereum is now the most prominent smart contract platform, it may be operated on a variety of other cryptocurrency blockchains, including EOS, Neo, Tezos, Tron, Polkadot, and Algorand. Anyone may develop a smart contract and deploy it on a blockchain. Their code is open and publicly verifiable, allowing anybody with a desire to examine the reasoning that a smart contract employs while receiving digital assets. Several programming languages are used to create smart contracts, including Solidity, WebAssembly, and Michelson. Each smart contract's code is recorded on the blockchain on the Ethereum network, allowing any interested participant to view the code and the current state of the contract to verify its functionality. Along with the blockchain and transaction data, each computer on the network, or node, keeps a copy of all existing smart contracts and their current state. When a user sends money to a smart contract, the code is run by all nodes in the network to achieve an agreement on the conclusion and value flow. This is what enables smart contracts to operate without the need for a central authority, even when users are conducting complicated financial transactions with unknown parties. You will usually have to pay a price called gas to execute a smart contract on the Ethereum network, so named because these fees keep the blockchain running. Smart contracts, once put on a blockchain, are typically unchangeable, even by their author. This rule is not without exceptions. This makes it more difficult for them to be restricted or shut down. What are some applications of smart contracts? Safeguarding the efficacy of medications by enhancing supply chain transparency, Sonoco and IBM are striving to eliminate problems in the shipment of life-saving pharmaceuticals. Tharum Portal is a blockchain-based platform that follows temperature-controlled medications along the supply chain to deliver trusted, dependable, and accurate data to various stakeholders. It is powered by IBM Blockchain Transparent Supply. Increasing trust in retail supplier relationships, the Home Depot utilizes blockchain-based smart contracts to swiftly resolve vendor conflicts. They are strengthening connections with suppliers through real-time communication and improved insight into the supply chain, resulting in more time for important work and innovation. Making international trade faster and more efficient by joining We.Trade, the trade finance network converted by IBM Blockchain. Businesses are creating an ecosystem of trust for global trade. As a blockchain-based platform, We.Trade uses standardized rules and simplified trading options to reduce friction and risk, while easing the trading process and expanding trade opportunities for participating companies and banks. What is the future of smart contracts? Smart contracts are complicated, and their potential extends far beyond asset transfers. They can carry out transactions in a variety of sectors, including legal proceedings, insurance premiums, crowdfunding agreements, and financial derivatives. Smart contracts have the potential to disintermediate the legal and financial industries by automating and simplifying regular and repetitive activities for which individuals presently pay large fees to banks or attorneys. As smart contracts develop features such as adjudications of traditional legal contracts and configurable smart contract templates, the job of attorneys may change in the future. Smart contracts can also help with compliance because of their capacity to automate operations as well as manage behavior, as well as their potential for real-time audits and risk assessments. While smart contract technology is still in its early stages, it has already proven to be extremely useful in various aspects of the blockchain and is rapidly evolving. Shortly, trustless enforcement and contractual commitments conducted through the blockchain may become widespread, and the need for documentation and middlemen in mortgages, auto loans, and other financial instruments may soon become obsolete and be a thing of the past.